So in trade management, that's the part that you do once you're already entered. To me, that's the part when you're least mentally stable, because you've expressed a view and you will only tend to see, psychologists have shown, we tend to see the view when, if I give you two pieces of fundamental information, one that's bearish for your case and one that's bullish, and you've bought the share, you superimpose the significance of the bullish one at the expense of the bearish one, and that is psychology, because you're trying to combat a cognitive dissonance in your own mind. So there was something that's upsetting you there, and there's something that's pleasing you, and you'll say the one's more important and overrules the other. So you need to have specified in your stop, your entry, and your take profit at the point of placing the order. And that's usually a pending order. In other words, the market comes and gets me, and this trade only becomes live if it does what I expect it to do and it runs a key level. If it doesn't, I'm totally happy and I will take the order away, and it can fall, do whatever else it was going to do, and I just say my view and all the research I did was incorrect, and well, let's find another place where we can try again. So the in-trade management, the hunt volatility funnel trading strategy reduces the pressure on in-trade management. Most people have pressure on in-trade management because they've never thought about their stop until they've already expressed the fact that they want to buy a market that they think is going up. And that's why they now have a stressful in-trade management. They've never thought when it's in money at what level they'd be happy to get out. And so the lowest common denominator is your emotions. So greed keeps you in, pain gets you out. Simple.
The hunt for stability in trading. Comment.
Stability in outcome in trading would be consistently doing a very specific set of systemic rules that have good elements of money management incorporated in them. And that will still mean taking losses, but it will mean taking sized, acceptable losses, and gathering and accumulating your wins. And that is the hunt for stability in trading, certainly in terms of outcome.
How can one plan trade entries and exits?
You should plan always, and how do you do that? Decide what you're looking for. Specify it. Write it down in algo format, so it's actually mathematical logic. So you need to almost write program code, English, and preferably get someone who can then code it for you. Be specific of those criteria. Don't have too much, but know which ones add value. Don't have conflicting criteria, because you'll never get any hits. And then you will have begun the process of establishing a personal strategy.